Welcome back, ladies and gentlemen, to Chalice Brands channel, forefronting the cannabis industry. And joining us today is Executive Chair John Varghese. Welcome, sir.
Thank you. Thanks for having me here.
And Happy New Year. It's always a pleasure, man. So we're going to get into a lot as we kind of make this video series. We're going to be breaking down Chalice Brands, the companies, looking into the balance sheet. But today we're going to roll back a little bit. I know you guys are involved in edibles, skincare, oils, and more, but I want to more explore your history leading into the company. And then hopefully down the road, we'll get the CEO on and we'll kind of just fully divulge the team here. But what kind of experience are you bringing to Chalice Brands? Roll back a little bit, take your time. You know, what got you into this company in the first place?
Right. Well, so let me first say what we are, and then I'll go to, because I think what we are today versus how I got here are two different things. Today I would say, Chalice Brands is a best-in-class multi-state operator, and we do seed to store, and we believe that we're here to create a West Coast brand, and we really think as the industry evolves. Deregulation happens. There's an opportunity to create a brand that will have value. And in our minds, a brand buyer buys at 300 million or more. Once we hit 100 million in revenue, we create optionality for ourselves. So we'll either get to be a brand acquirer, could be an MSO acquisition candidate, or we could just continue to run business on our own. But everything we're doing is built around the Chalice brand, and how to across all product lines. We have every offering set you could imagine, as you said, from edibles all the way down to the grow and back up. How I got here, I was fortunate or unfortunate to be an early investor in cannabis, and made money, lost money in the early rounds, like all of us did, starting in 2017, 2018. Invested in what was then called Golden Leaf. And, I was brought to it by one of my friends at Canaccord, who's one of the, premier lead investors in the space and investment bankers in the space. En masse, we all left Aurora back before, Aurora took off. And he had us move into Golden Leaf because it was going to be the US play. So at one point in time, this was the first US listed cannabis company. And from that point on, company was able to raise $100 million. And fast forward to, when I finally got involved, most of that was blown away. The common theme that I found in most of these early cannabis companies, we basically gave money to people who are used to growing cannabis in a room this big illegally, and all of a sudden gave them 10, 20, 30 million dollars and said, hey, grow it to the size of that background you have behind you. We expected them to know how to scale, how to run businesses, and that didn't happen. It was only the odd ones that did do a good job of it. Fast forward to 2018, the stock's getting killed, performance is bad. I got asked to go onto the board as a favor to see what's going on. So that was effective June 2018. My background prior, I have a fairly strong capital markets, both from PE and venture. I sat on 20 plus boards. I was executive chairman of an investment bank at one point. So, it has enough relationships on the street, and I'm an operator. So combination of all those roles is why I was asked to join. And Jeff Yap, who's the CEO, and I kind of came to the company independent of each other, but around the same time. He came in as a consultant, I came in as a board member. And what we saw then, the part of, if you were an investor early, valuations were going through the roof. Part of how the valuation was driven was, okay, that whatever I just didn't work. Let me go buy the next thing and pay more so I can actually validate my value by what I pay you, whether or not it was real or not. And so I mentioned the 100 million that Golden Leaf had raised. It most of those, what the capital was used for, did not work. At the time, there was probably another 50 to $100 million worth of transactions on the table, and probably the best thing we did was got our hands around them and canceled or walked away from everything that we were looking at. There's another gentleman who joined at the same time, Rick Miller. So that name will come in handy in later segments. Fast forward to the end of 2018, we became probably one of the first companies to realize this isn't working. And we brought in a restructuring specialist. He basically, by December of 2018, took out 25% out of the cost structure, which needed to happen. But he also didn't bring a great deal of vision to the party. Fast forward another 3 months, okay, where are we going to go from here? And that's when my big mouth got me into the role of interim CEO. And I live in Toronto. Chalice, Golden Leaf at the time had a Canadian operation and the Oregon-based business. My mandate was to go in to figure out whether or not there was a business here. Spent 3 months or so, basically 3-4 weeks a month, living in Oregon, understanding the infrastructure. Looked around, saw that there was enough in the underbelly that was worth saving. Went back to the board and said, look, if we can clean up the balance sheet, and at that point in time, we had 20 odd million of debt US with 6 million of cash, and it was due in the fall. My recommendation was, if I can restructure the debt, then clean up the balance sheet, then we should go look for a proper CEO, full-time CEO, because I obviously with the at that point in time how the U.S. border was, the illegality of crossing from Canada to the U.S. is a danger and still is each and every time I go. We went through a search, and Jeff Yap became our CEO. Part of that was Rick Miller. Jeff and I kind of locked arms and said, we're here together and we'll see it through to the end. So I went from CEO to executive chair. Rick went to lead director, and Jeff is CEO. And and how they got here, especially Jeff, when we talk about Jeff later, it's worthwhile because you would never get this talent pool at a company of the size we were at. A lot of it had to do with the passion that Jeff brought to the industry and some of his family background, and why we stay together is we made a partnership agreement with each other. We exited from the time Jeff took over as CEO. If you remember, there was the vape ban that hit. That was in 2019. Yep. Then we got out of the vape ban, COVID hit. Right? And we entered 2020 with 4 million of cash and burning $1 million a month. We exited 2020 with $1.5 million cash and turned the company around. And we started generating positive cash flow. We're now an EBITDA positive company. So we've been through all the hard work. Now, along the way, we had a short squeeze. So the stock, ironically, the stock company is by any measurement a better company today than it was 2 years ago. It was worth more 2 years ago, right? Like the revenues up, double. We're profitable. We're growing, but yeah, we were worth more back then. So I think from an investor perspective, this is the opportunity, right? Now we have a clear strategy. We have a team that's capable of running a $500 million company because of Jeff and who he's able to attract. And now we're on we're going to start with I mentioned the West Coast focus. We're going to go try and get a significant footprint in Oregon while we grow in other states. Jeff and I divide the world up. I'll take the capital market strategy and help bring deals in. He'll run the operations, and he'll tell you he wouldn't have taken it on if he had to take on the public side. And if you've watched the markets in the last year and a half, you can see why he wouldn't want to do that. So it's a good partnership, and we are daily in touch with each other, and I think the stock is not reflecting the goodness of the company in terms of value. But I think that's where we're getting better at telling the story. But frankly, from the time I got involved, our approach is put our head down
Yeah.
and just execute. There's nothing, we didn't deserve to be heard, right? We've gone from a story nobody wanted to hear about, didn't deserve to hear about, just not the story you should listen to. Now we've hopefully have earned the right to tell our story and to demonstrate why, we are well placed to keep growing.
And on that note, John, I think you've really touched on just about some of the most important key parts there. I mean, the fact that you guys have gone from seeing the struggles of the industry to being able to turn this stuff around and actually take that experience and move it forward into a much better place. I feel like the cannabis industry is kind of heading into its 2.0 period right now, where the solidification and the companies that are going to last are starting to prove themselves out. So this is going to be really fun. When we come back around, what we're going to do is we're going to fully dive down and further expand on a lot of what you were mentioning here when we're talking about the insides and just this vertical integration that you guys have, and then we'll get more into the balance sheet sides where you're talking about some positive EBITDA. So on that note, I really appreciate your time today, John. Thanks so much.
Pleasure. I look forward to the ongoing series.
And on that note, folks, if you ever have any questions, let us know what you think in that comment section below. We can bring it up to John, or perhaps get the CEO on at a later date to do a Q&A, but also consider subscribing for those future updates. Stay cool, stay awesome, and I look forward to catching you in the next one.